Hello everybody, my name is Rashad. As you know, I work at Cemetery Financial Group as a licensed life insurance agent, and my profession is mortgage protection life insurance. So I already explained about what is different between home insurance and the mortgage insurance in my previous video. If you're not watching, you can watch in my YouTube channel. At this video, I want to explain to you why you need a mortgage insurance, mortgage protection insurance in early age than like an older age. So let's say you are 30 years old and you are 50 years old and you are 65 years old. Three different scenarios. So I will explain to you why it's making sense to get insurance in here, mortgage insurance, than here or here. First thing first, when you're 30 years old and you're healthy, insurance coverage will be a cheaper price than 50 and 65 years old. Because that ages 50 and 65 year is make insurance company to get you an estimate premium a little bit up, because when you got 50 you get more risk than when you have 30 years old. Let's say you have a 200k mortgages, right? When you get 30 years old, insurance companies think, okay, he's still 30, he still have a time, so he's still looks okay, not that risky that he's gonna pay that mortgages, and the insurance company is not gonna get any trouble. When you come 50, this age make the insurance company think when you're 50, you are in the middle of like somewhere in 10-15 years, you can be dead or something else, which is you still, let's say after 10 years, if you still has 100k mortgages, is a risk for company. And the 65 years old is crazy risky for company, which is you still have, let's say 15 years, you still have a 15 years 200k, so risky. That's why when you get your mortgage protection insurance and when you're 30 is healthy, you're gonna probably get between $50 to $100. When you're in your 50th, you're gonna get probably around $200. When you're in your 65, you're gonna get probably $300 and up. These are estimate price. Again, so many things affect the prices. This is just estimate price. I wanna show you how when you're 30 is making more sense to get mortgage insurance than when you're 50. Another thing is mortgage protection insurance is a little bit different than other one, because during a period, let's say you're 30, right here you're 30 years old. In a period of you have a 30 years, let's say mortgages, and this is your mortgage 300k here, right? 300k, 30 years, and after 20 years, when you come to 50 years, your 300k mortgage insurance is not 300k mortgage insurance anymore. This is going to be, when you come here, this is going to be, might be 100k left, because mortgage every year is reducing. Like now you have a 300k, after 10 years you have a 200k, after 20 years only you have 100k to pay mortgage insurance. But in your 30, if you got 100k plan, if something happened to you right here, right, 50 years, let's say you are 50 and God forgive, just died or something happened, you have a rest 100k. Listen here, this is so interesting. And something happened to us. I'm not saying that it's specific to you. Something disabled or dead or like so many things. In here you have 100K. If something happened to you, you still get 300K. You beneficiary, whoever chooses to get this money, even after 20 years, you have 100K mortgages, you still get 300K. Can you imagine, like, getting 50, something happened, you have 100K, and you know, your beneficiary gonna get almost 200K as a benefit. This is why mortgage insurance making sense, which is you pay same amount, same premium, nothing changed. If you pay $60 a month, during the 20 years, it depends how many years, you still pay $60. Nothing changed. If something happened to you, let's say, like usually what insurance do, like let's say every time you apply for insurance as like health insurance, every year you're getting different prices, right? Because of your health or different things. The mortgage protection insurance is a fixed insurance, which is fixed amount and it's not gonna change. Let's say when you come 40 and your health, let's say not serious, but something happened, still gonna be $60. That's why it makes more sense to get insurance when you're 30 than you get insurance when you're 50. When you get 50 and you get insurance, you have to pay $200. $200 is a big amount of money. And again, when you're 30, you have a less, like a health problem. When you come 50, you have a more problem. And it's gonna be hard for you to, still possible, but making more sense to get 30s, which is less fixed amount, let's say $60 or $70, it depends, it's so many factors, but let's say $60 or $70, then to come here, if something happened and you think, oh, I'm 50, and you're gonna pay $200 a month. So please just think about it. Think about how to protect your family. Again, mortgages are important, which is our most valuable asset. So again, if you have any question, anything else, this is my number right here. And this is my website. Get your free consultation. I will try to answer all your questions. And the next video, I will talk about a little bit cashback options. There's the options, you invest this money after 15, 20, or 25 years, it depends how many years, you can have a cashback plan. Like you can get your money back after 15, 20 years, how much you invest. So, but now you understand why we need to get the life insurance when we're 30s, 25, 35 than we get this year. Because much cheaper, much better. This is fixed amount. Even after 20 years, you're gonna pay $60. God forbid something happened, you're gonna have less amount of mortgage, but you're still gonna get fixed amount of mortgage protection insurance, God forgive if something happened. So thanks so much for watching this video, and the next video, again, I will talk about a little bit cashback options. See you in the next video.